Hello everybody, I'm Shrinidhi and welcome to my channel. So in the earlier video, hope you would have gone through the introduction on accounting standards where we have seen on what is accounting standards, why accounting standards are being framed and to who all the accounting standards, whether it is Ind AS or the accounting standards pronounced by ICAI are applicable. So as planned, today we are going to learn about an accounting standard describing of revenue recognition AS9. So if you have any doubts or anything to be clarified relating to whom this standard is applicable to, then you can refer to my earlier video, the link of which I have given in the description box. Now let's move on to today's topic, that is AS9, revenue recognition. So this standard is pronounced by the Institute of Chartered Accountants of India. This standard, revenue recognition, is something which plays a role in the preparation of the statement of profit and loss account. So the revenue which is to be recognized comes up on the statement of profit and loss account. So this standard deals about the timing and the amount of the revenue which is to be recognized. Before we move further, let's understand what revenue gets covered under this standard. Any revenue which is being generated in the ordinary course of business gets covered under the standard. However, there are some exclusions. We will discuss about it later. So the inclusions are primarily the revenue which is being generated from the ordinary course of business, be it sale of goods or rendering of services or use of resources, which would generate interest, dividend, or royalty. So these are the revenues which gets covered under this standard AS9. However, there are some exclusions, namely revenue from construction contracts, revenue from hire purchase or lease agreements, revenue from government grants or subsidies, revenue from insurance companies or such contracts, and revenue from foreign exchange related gains or losses. So why these are being excluded from this standard? Because there is a specified standard which deals with such nature of revenue. Say AS7 deals with construction contracts, AS19 deals with lease agreements, we have AS12 for government grants and AS11 for foreign exchange related gains. So because there are specified standards dealing with these nature of revenues, they are being excluded from the scope of this standard. Now let's move further on few examples or illustrations which I would like to take you all through. In the definition of revenue, what we learned was revenue which is generated from the ordinary course of business. So in this example, let's try to understand whether it comes within the scope of AS9 or not. First is gain from disposal of fixed asset. As we read the term, it is fixed asset, which means that it is not something which the entity deals with it in the ordinary course of business. Fixed assets are something which was used for the running of the business, or which is, as we learned earlier, this is a capital expenditure, right? So the gain on disposal of the fixed asset is not something in the ordinary course of business, and it is a realized gain. It is not a hidden gain, it is a realized gain, but however, it is not in the ordinary course of business. It is not within the scope of AS9. It doesn't get covered by the revenue definition of AS9. Second is appreciation of value of land and building. Obviously, it is not a realized gain, and land and building, which is a fixed asset, once again, is used for the running of the business, and it is not the business itself. So as we know, such appreciation and value of the land and building or similar kind of assets do not get covered in the revenue definition of AS9. Third, any realized gain which is generated from discharge of an obligation at less than carrying amount. Yes, it is a realized gain. Say, for example, gain from expiration of call option does result in a gain. However, this gain gets settled at a less than carrying amount, and of course, it is not in the ordinary course of business because it is an investing activity. So even this type of transaction or any revenue which is being generated do not get covered under the scope of revenue definition of AS9. Let's now try to understand what is revenue. So having understood on what are all the revenue streams which get covered under the scope of AS9, now let's move to the next section. That is, let's understand what does the term revenue mean. So revenue is the gross inflow of cash, receivables, or other considerations which is derived from the ordinary course of business, the ordinary activity, which could be either sale of goods or rendering of services or use of resources, which could result in interest, royalty, and dividend. So, what we need to understand here is this portion of the standard tells about the amount of revenue which is to be considered for revenue recognition. And what does the term revenue mean? So, revenue it includes the entire gross inflow. So, whatever the businesses, say the sale of goods or services or use of the enterprise resources, it could be the company has given a capital for which it is earning some interest. Maybe it is giving some capital on loan. If that is the business, then it would earn interest income. If it has some sort of patent, trademark, or know-how, then it will earn for that usage of such patent or trademark in the form of royalty. Or if it's dealing in shares, then it would earn dividend if that is the business of that particular entity. So, in one definition, we have seen the nature of business and the revenues which get covered in the standard. And the revenue could be either, it only tells about the gross inflow, which means that it could be either a cash sale or credit sale, that is receivable, or it could also be rendering or doing the business in exchange for something else. For example, for some other consideration. We have understood what does the term revenue mean and what is the amount of revenue that gets booked as income, or the revenue flow in the books is whatever the amount which is being charged to the customer or client for the services rendered or goods sold or the use of it. So far we have understood what are the revenue streams which gets covered under the standard, what does the term revenue mean, and what is the amount of revenue which is to be considered for revenue recognition. Now let's move on to the next part of the standard, which is the penultimate part of the standard, which deals with the timing of revenue recognition. So as I said first at the beginning, this standard deals about the amount and the timing of the revenue recognition for the various streams of revenues. So next is the second number thing is timing of the revenue recognition. So the timing of revenue recognition in case of sale of goods is at the time of transfer of the property in goods or at the time of significant risks and rewards. So here what you need to consider is all the time the time at which the proper transfer of property has taken place and the time at which the transfer of significant risks and rewards are taking place do not always coincide. There are cases when they may not take place at the same time. For example, transfer of property would not have taken place, but the risk and rewards, significant risk and rewards could have been transferred. So when the time doesn't coincide, then we should go by the time at which the transfer of the significant risks and rewards. So that should be the date of revenue recognition. For example, let's see sale of hardware in which the hardware device has got transferred, but the access code is not given. So in this case, the transfer of hardware device means that the property in goods is being transferred. But unless and until the customer receives the access code, they won't be able to utilize the hardware in its best use. So the significant risks and rewards have not been transferred. So in this case, at the time when the access code is being delivered to the customer should be the date of revenue recognition for that particular hardware. Moving on next to, in case of rendering of services, what should be the timing of revenue recognition? There are two cases. One is proportionate completion and other one is completed service contract method. So proportionate completion in this is mainly when the revenue is being recognized in proportion to the services being rendered or completed. So if the nature of service is such a way that it extends over a period of time evenly on multiple activities are taking place and the service is being rendered, if that is the case, then the revenue can be recognized over the period of time over which the service is being rendered. We are recognizing the revenue proportionate to the level of service which is being completed. For example, tuition fee. There may be cases when the home tutoring services are being rendered for school children. So tuition fee could be paid for the entire year, but the services are being rendered across the 12 months or across the 9 months. So in such cases, what would happen is tuition fee is to be, the revenue is to be apportioned across these 9 or 12 months, whatever the period over which the service is being rendered. Completed service contract is the case when rendering of service is either a single act or series of acts, whatever it may be, but the service is said to have been completed only when all the activities are being done. So only upon completion of all these acts or all the series of acts upon which the service is said to have been completed, if that is the case, if the nature of the service is like that, then the revenue is to be recognized only when all the activities relating to the service is being done as per the contract. Moving on to the next is use of enterprise resource. As I had discussed earlier, there could be capital which the company would have, the company's business would be to lend out loan or to lend capital for other entities or other businesses. So if that is the nature, then their income, the revenue stream mainly would be interest in nature. So if it is an interest, then what should be the timing of the revenue recognition? The timing would be whenever the cash or that particular interest income is due. That should be the time of recognizing the revenue. And how it is to be calculated? As usual, it is the interest calculation formula, the time, proportionate time for which the capital is being lent and multiplied by the amount which is being lent, that is amount outstanding, more to be precise, in multiplied by the rate of interest at which the company is charging or the entity is charging from the customer. If royalty is the case, that is the company who could be owning a patent, trademark or know-how or copyright, then in such cases the revenue is being recognized on accrual basis. Accrual basis in the sense whatever is pertaining for that particular financial year is to be recognized as revenue. Third is if the company is in the business of shares, that is investment of shares, then the income could be in the form of dividend. So this income is to be recognized when the entity has the right to receive. So whenever the entity gets the right to receive the payment in the form of dividend, then that is the timing for recognizing that particular dividend income. So far we have discussed on the timing of the revenue recognition, but there is a small thing, final note which the standard closes, that is uncertainty. Timing of revenue recognition we have seen now, but there is always an uncertainty in the remittance of the revenue. If there is any uncertainty with respect to the ultimate collection of the revenue, in such cases, then we need to look into reconsider the timing of the revenue recognition, which means that the revenue recognition is to be postponed accordingly. Let's see that in detail in the next section now. The standards discusses the types of uncertainties in this particular AS9. So what is it? Let us bifurcate it into two. At or before revenue recognition. That is, we have not even considered this particular revenue in our books. We have not yet considered, the contract has been entered, that's it. We haven't recognized it as a revenue in our books of account. If that is the case, then we need to see the quantity. The uncertainty could happen whether with respect to the quantity or with respect to the timing. If it's with respect to the quantity, that is, there is any uncertainty with respect to the consideration, then in such cases, the revenue recognition is to be postponed. If there is any uncertainty with respect to timing, say there is any export related issues or there is some price escalations due to which the price escalations or export related issues due to which we aren't sure whether to conclude with this particular contract at this particular price or such uncertainties, and even in such cases the revenue recognition is to be postponed. If there are no uncertainty, then we can go ahead and recognize the revenue irrespective of the cash flows of the receipts, which means that so far that we are certain about the inflow, whether it is either a cash inflow or a receivable inflow or any other consideration, as we are certain on the inflow, then we have to go ahead with the revenue recognition for the entire amount of the contract. The second part is after revenue recognition, if there are any uncertainty. How could after revenue recognition there could be any uncertainty? There can be uncertainty with respect to the collectibility. That is, depending on the customer's creditworthiness, there could be chances of uncertainty with respect to the collectibility of the revenue. So if that is the case, then the standard guides to create a separate provision, and we need to keep that provision separate and not set it against the revenue. So the revenue shouldn't be adjusted against for this particular provision which is being created. So this is the provision for bad and doubtful debts which they have meant. Even in the balance sheet, we have to show under application of funds, gross trade receivables, less provision for bad and doubtful debts. So here is the place where the provision is to be shown, and it should not be adjusted in the profit and loss account against the revenue. So once again, to briefly recap on what all we have discussed, let's recap in short. So what all we have seen under AS9. So first we saw what are the streams of revenue which gets covered under this particular AS9, which is on sale of goods or rendering of services or use of resources which could result in interest income, dividend income, or royalty. Then next we learned on the revenue definition, and third we learned on the timing and amount of revenue which is to be recognized with respect to each of these streams of income. Finally, we saw in case of uncertainties on the ultimate collectibility, how the revenue is to be recognized and when the revenue recognition needs to be postponed. So these are the aspects which we have learned. This is what the entire AS9 is all about. What you have to do is just go through the standard and you can ask your doubts which you have, or if you have any specific illustrations to be worked out or any specific situation or problem which you feel like whether how the revenue is to be recognized, any sorts of doubts if you have with respect to AS9, then you can post them in the comment section below. Also, if you have any scenarios, if you are confused on how the AS9 is to be applied, even that you can post it in the comment section. If you're looking forward for any feedback or suggestions, you are most welcome. You can look forward for next video where I'll be posting on the corresponding the Ind AS or the accounting standards converged with the global standards for revenue recognition in my forthcoming lectures. Hope that today's lecture helped you and it added some insight. I tried to be detailed and gave illustrations as well wherever necessary. Hope that benefited you all. And if you have any queries, suggestions, or feedback, then you can please post them in the comment section. And do not forget to subscribe to my channel if you are new. And thanks for watching. Bye bye.